For nearly 3 years, Beth stopped opening her banking app, not because she'd resolved to stop worrying about money, but because looking felt worse than not knowing. Every unopened statement, every notification she swiped away without reading was, in her mind, a kind of temporary relief. Her friend Priya, dealing with a comparably tight budget during the same stretch, did the opposite. She checked her accounts every single morning, even during the months it was genuinely painful to look, treating it as a 5-minute habit rather than an event to brace for. When Beth finally forced herself to open 3 years of unread statements at once, she discovered a $1,200 subscription charge that had continued silently for over a year after a service she'd forgotten to cancel, along with 2 returned payment fees she'd never known about. Priya, checking daily the entire time, had caught and canceled a similar forgotten charge within its first month. Researchers studying financial behavior have a name for what Beth was doing: the ostrich effect, a well-documented tendency to avoid financial information, specifically because it triggers anxiety, even when that avoidance makes the underlying situation measurably worse. Studies tracking investor behavior have found that people check their portfolios far less frequently during market downturns than during periods of growth, not because the information matters less during a downturn, but because looking simply feels worse, and the brain, given the option, reliably chooses short-term emotional relief over the actual information it needs to make good decisions. The mechanism is straightforward once it's named directly. Anxiety about money creates an urge to avoid the source of that anxiety, which feels, in the moment, like coping. But avoidance doesn't actually reduce financial risk. It just removes the one tool, information, that would let a person actually respond to problems while they're still small. Beth's forgotten subscription cost roughly $1,000 more than it needed to, not because she was careless with money in any broader sense, but because the specific act of looking had become so uncomfortable that she'd unknowingly traded a small, manageable irritation for a much larger, compounding one. None of this means the discomfort Beth felt was irrational or a personal failing. Financial anxiety is a real, often justified response, particularly for anyone who has experienced genuine scarcity or instability, and telling someone to simply check their accounts more without acknowledging why looking feels frightening in the first place misses the actual problem. What separated Priya's experience from Beth's wasn't an absence of anxiety. It was a 5-minute daily habit, small enough to tolerate even on the hard days, treating the check-in as routine maintenance rather than a verdict on her own worth or competence, which kept the anxiety from ever compounding into avoidance in the first place. Beth eventually adopted the same small daily habit Priya had used the whole time, not because the anxiety disappeared, but because 5 minutes, done consistently, turned out to be far more bearable than the eventual reckoning 3 years of avoidance had quietly been building toward the entire time.